Hi, welcome back to my channel. I'm Cassie Villa and I'm a realtor, property manager, and investor here in the San Antonio, Texas area. On my channel, we talk about all things real estate, from investor updates and market updates to gardening and home improvement. So if that's your cup of tea, make sure you click like and subscribe. Now on to the show. So today we're going to talk about inflation. The reason we're talking about this today is because it has been all over the news. It's something that a lot of people are really freaking out about, myself included. And so I thought, I need to understand what's going on, why inflation has gone up so much in the last month, and, is that going to affect my investing strategy? Should I be worried about it? What's going on? And so we're going to talk about it. Before I start, I need to do the whole disclaimer that I am not a financial planner. I'm not an economist. I'm just a lowly, humble realtor that has read some articles. Okay, so don't come at me. I was really careful on these slides to pull from other sources and quote people who do know what they're talking about, and just I'm just here to sort of present that information. In case you are also wondering why everybody's freaking out about it. I'll try to link if I remember, I'll try to link some more in-depth videos that really go into it, just in case you want to research more. I did have a couple that I used and that were recommended to me. So, inflation is the decline of purchasing power of a given currency over time. So, basically, we all know that 20 years ago, you could buy a Coke for 50 cents, and now the same bottle of Coca-Cola is going to be $2, right? That's inflation. The same amount of money buys you less and less and less over time. And the reason that that's something that investors really talk about a lot, and really everybody should talk about a lot, because if you just have a savings account and you dump a bunch of cash into your savings account or put a bunch of cash in your safe, that is losing money over time. It's not even staying just consistent. It's actually losing money every single year. And so that's why we have to invest. That's why everybody needs to have some kind of investment plan, because your money is losing value. We have different hedges against inflation, and we'll go over that in a minute. Real estate is my favorite, and a lot of people like real estate as a hedge against inflation. And so that's why we're talking about it today. Annual inflation rates. So this is from the Consumer Price Index on the usinflationcalculator.com. I've cited all of the sources in case you want to go look at the full articles. But you can see over the last decade, inflation has been, between 1.5 and 2.5% most years. And then this year, it spiked up to 5.4%. So that is concerning, because that's more than double kind of the normal rate of inflation that we've gotten used to this decade. We need to figure out, why is that? What's going on? On the next chart here, it's the same source. They've just categorized it. And so inflation on all items you see there in the red is still 5.4. Food inflation is 3.4, which seems really low to me because my grocery bill has gone up a lot. But it's what it says it is. Energy there at 23.8 is your gas prices. And we all, we should know that gas prices are always based on a ton of different factors, geopolitical, supply and demand, everything. But that right now is spiking, and then you know that if gas prices go up, then the price of almost everything has to go up as well. And then core inflation is all of the items, but taking out food and energy, because like I just said, the price of oil is so volatile that it can really affect the big picture there. So core inflation that takes that out, so you can kind of see, okay, what's the actual inflation on everything else. Here's another chart that's from a different source. This is from Bureau of Labor Statistics. So the numbers are slightly different, but but pretty much the same. So, their total overall inflation is 5% and their core inflation is 3.8%. So slightly lower than the previous graph. But you can see on this line graph that over the past few years, this is very unusual. This is very out of the ordinary, and you can just see over how the past couple of months, it's really, really taken off. But I included this graph here because if you look at the last decade, okay, 5% inflation seems like, oh my God, the sky is falling. What are we gonna do? America is ending. I need to go get my bunker and buy some MREs. And looks, I'm not making fun of preppers. I'm a prepper. Okay, I have a lot of food storage, so not making fun. But if you look at the inflation over time over the past 100 years, it's really not out of the ordinary. 5% inflation really isn't very high compared to other decades. For example, the 70s and 80s, you can see here on the graph that we have double-digit inflation. And, I've heard, I wasn't alive in the 70s and most of the 80s. So, but I do hear stories like my parents about gas lines and everything being pretty chaotic because prices were going up so much. Homes being difficult to buy because interest rates were so high. So we are not in that situation at all. That's not where we are. It's one of those things, like in perspective, in the 100-year perspective, we're definitely not in a crisis. If you're looking at 3 years, then we definitely are. Okay, so just keep this in mind. Historically, it's not that. 5% inflation is not the end of the world. So if we look at it and say, okay, so historically that's not that high, but something has happened in the last couple months for inflation to suddenly shoot way up. What economists call that is, or what economists are calling what's happening currently, and by economists I mean people at the Fed and such, is they call this transitory inflation. And what that means is that it's very short-term inflation. So they are not predicting that this is going to be the new normal and that we're on the beginning of this really long uptick. They are saying that this is going to be, several months of elevated prices, but caused by certain events. So not caused by some structural long-term problem, caused by current events, right? So we have some weird things happening in the world right now, and that is definitely causing some supply chain issues, some demand issues, etc. So that's where we're at. We're calling this transitory inflation. Most of the sources that I found that were reputable were calling this transitory inflation and giving their reasons. So we have pent-up demand, everybody was at home, couldn't do anything, and now suddenly everybody's released, right? And so there's all this pent-up demand, people are spending, they've got their stimulus checks, people are, wanting to buy things, but the supply chain was affected by, that C word. So we've got a problem there. And so to demonstrate this, I thought instead of looking at, he said this, she said that, they said this, I would look at specifically lumber prices, because that's something that if you're an investor or a homeowner, likely you have noticed that lumber prices have skyrocketed in the last year. And there's several reasons for that. So you can look at this chart, you can see even long term, this is definitely a spike. This is definitely something to be like, what the heck is happening? Why is this happening? Lumber prices increased 377% in 1 year. So that is causing all kinds of issues. Home builders are really, really having issues. They're passing that cost on to the home buyers, and it's a whole thing. So we look at what caused this spike. And it's just basic economics, supply and demand. So demand increased because housing market has been going crazy, right? For the last couple of years, it's been just on this wild trajectory. So we have demand for new builds. And then as everybody was cooped up at home during COVID, they were building decks and fences, and everybody was doing projects because there's nothing else to do, right? And you were trapped in your home. And so there was a lot of demand for lumber. And then the supply, at the same time as demand was going through the roof, supply was already low. And I didn't know this. It was pretty intriguing to find this out because I had no idea. But in April 2017, the Trump administration raised tariffs on Canadian lumber. At that point, lumber imports started to fall, and then prices got volatile. So if we go to the graph before, you can kind of see there that in 2016, there's all of a sudden prices start to go up. And that makes sense if we know that once the Canadian tariffs were put into place by the Trump administration, that caused some supply chain issues. Makes perfect sense, right? So we kind of were chronically undersupplied in lumber starting in 2017. So way before, the C word, way before any of this happened, we were already undersupplied and prices were rising. And then when the big C word hit, we suddenly have a shortage of labor, supply chain issues, production issues, plants having to close, etc. And so we have this huge supply problem while we have more demand than ever. Okay, so that's why lumber prices in specific are higher. Now, we could look at pretty much anything that has risen in value and we can make this chart, right? Demand rose for reasons and supply fell for reasons. And so that's what's happening in the market. That's why a lot of the economists are not flipping out about the inflation, because they realize, okay, I can explain why this is happening. And hopefully as increases and hopefully as demand goes down a little bit, or if supply just increases. So in the article I read about the Trump administration raising tariffs, it said that they were trying to get special permission to lower those tariffs again, just in the short term, to try to help with the lumber prices. And so hopefully those will start to go back down. We can solve that problem. And then you got hundreds of other items to do that with, to fix the inflation problem. So I'm just here to say, be aware of it, but don't freak out. Talking about inflation in general, the reason that people like real estate, one of the biggest reasons that I hear for people wanting to invest, sometimes people will call me, often people call me and they'll say, I want to take money out of my 401k and buy a rental house. I want to diversify my assets. And a lot of people are looking at it as, it's not that I want to make a ton of money in real estate. It's just that I'm worried about inflation, and this house is going to serve as a hedge against that. And so you can see in the first quarter of 2021, investors bought 1 out of every 7 U.S. homes. So that's increased. Before it was 1 out of every 10. So we have investors buying more residential properties. You can see this quote from John Tuhig, who says that, if you can buy a property at a 30-year fixed rate loan where rents will rise and appreciation, then you are well suited against rising inflation. So rents are going to go up if inflation happens, right? If salaries and wages increase, then rents can increase as well. But if you're locked in at today's prices, then obviously your money is safe. Your money is growing along with the inflation. And so, it's something to keep in mind. This bottom quote here says, even homes that were bought at the peak of the housing market prior to 2008 are worth more now than they were then. Time smooths out the dips and proves equity growth. So that's Steve Schnall of Quantic Bank. I've never heard of that bank. Quantic Bank. So, you know, it's just the idea that if you have an asset, you know, you trade your money for a house, that house is always going to be worth the price of a house, even if the value of a dollar goes down. Whatever that value is, you could sell that house and get that amount of money. So that's why we call it a hedge against inflation. In making this, or in researching for this video, I listened to an interview with Ray Dalio on Bloomberg. So I'll link that YouTube video as well. It was really interesting. It was Ray Dalio and then a Harvard economist, and they were kind of going back and forth on what they are predicting and things. And he mentioned that what we all know, the Fed has kept rates low, and that's caused, or it's helped, this housing market boom for the last couple of years. And then he said this, and this is what I've been worried about as well. He said, you saw the reactions in the markets when the Fed just hinted at raising rates. I don't think they can tighten a lot without having a big negative effect. And I'm worried about that too. The last time the Fed just kind of barely raised rates a little bit, it did cause a slowdown. It was right before COVID. So, you know, different world, right? But it did really cause the real estate market to slow down a bit. And so that is something I'm very worried about, because they've got to raise rates at some point to stop runaway inflation. And at that point, that's when, you know, it's just, how do you do this without causing a crash, I think is what everybody's trying to do. Ray Dalio said, I'm more concerned about inflation in financial assets. I think we're building kind of a bubble. So that was another thing he said during his interview. Lower returns have led to higher asset prices. And so long-term returns are going to be lower on assets. What I understood, and please definitely go watch what he said, because you could get the full picture there. But my interpretation of what he said was that the asset prices have risen so much, there's not a lot more room for them to keep rising. So if you bought a house in 2016, you've caught that huge appreciation. And now if they start to slow down, that your long-term return from here on out is going to be lower. I think that's the point that he was making. And I think that's also where he says we're building kind of a bubble. Like, we can't expect asset prices to appreciate 20% every single year. At some point, it has to slow down. At some point, it has to stabilize. So all of that is to say, like, yes, buy real estate as a hedge against inflation. That's a good idea. But don't buy it counting on appreciation. Still buy smart. Don't just buy real estate just to have it, just because you're worried about inflation, just because you've watched some guy on YouTube that said the world is falling, the dollar as we know it is about to end. Don't just buy something at whatever price because of that guy, right? Read these articles, understand what's going on, understand how to find a good deal. Now, the definition of good deal may have changed because of the market being so hot, but you can still find something reasonable. You can still find something that will cash flow, or if you're looking for a personal residence, you can still find something to make sure that you're, another way that's a hedge against inflation, which I'm talking to investors, but as a homeowner, it's also a hedge because your rent is not going to go up, right? Once you get the mortgage, that's your new housing cost per month. So that's something else to keep in mind. But yeah, you can still buy real estate as a hedge, and I recommend that. But again, just be cognizant that there are people who are talking about kind of a bubble. There are people talking about, the Fed needs to raise these rates. It might affect the real estate market. And so don't go just buy anything expecting that it's going to be a good deal. Does that make sense? Maybe not, but I want to hear your comments. I definitely want to hear what you think. If you are worried about this latest inflation bump, if you are not, if you're still buying, what are you doing? What's your strategy? How are you changing your strategy based on new information? Definitely leave a comment and let's talk about it. Till next time.